The first half of the year is over. The PSEi is down 1.09%. Can we turn things around in the second half? Meanwhile, the S&P 500 is up 14.5%. Can this be sustained? After Biden's disastrous debate, will it be Trump 2.0 this November? Let's discuss what this means for the markets. My name is Den Slim, and welcome to another episode of Monday Market Outlook. Now, as expected, the BSP kept rates unchanged but surprised with some dovish remarks, citing that the board was on track to cut in the third quarter. Now, take note that there's only the August 15 monetary board this quarter. So if the BSP is really on track to cut rates this August, this will actually mean that we will be cutting rates ahead of the Fed. Looking at the Fed probabilities in September, there's only a 57.9% chance of a rate cut. But, you know, this is actually up from the 41.7% last month after GDP numbers came in slower than expected, and the Fed's favorite inflation gauge, the PSEi price index, slowed further, showing signs of weakness in the economy, coming in at 2.6%, which is lower than the 2.8% expectation. So this was the slowest pace in 3 years. And while the latest reading puts the Fed on track as soon as September, a 57% chance really isn't a decisive number. So if the BSP cut rates this August, this would put us back on track to challenge the previous peso lows at 59.15. Let's look at the markets. The market opened last week with a strong bounce off of the 6150 demand zone. With the announcement last Thursday, the market tapped into the 6,375 zone and broke through this key level on Friday to end the week on a high at 64.11. At this point, best case scenario is for the PSEi to extend the rally here maybe, and then retest support, which was previously resistance, and hopefully bounce off of it. Now, what this would actually look like would probably be more like a head and shoulders formation, right? So if this happens, right, this would look like a head and shoulders formation, and if so, we will have an upside of at least maybe from here to here. We could probably reach 6,884. Last episode, we did mention that we do tend to get a July rally before the correction that usually happens by the ghost month. And if we look at recent price action, again, let's look at this. Recent price action. For how many years? 1, 2, 3. These are ghost month reactions, okay? See here? It has been pretty consistent, no? But will it be the same this year? You know, there's a saying that historical price action is not really a reliable indicator of future price action. But for this thing to occur a bit consistently, the statement does seem to be a bit contradictory. But we all know if it was that easy, everybody will actually be rich right now. But let's check some possible scenarios. So best case scenario, the PSEi bounces back into 6,888, and if we pull back to the weekly charts, we can see how this actually makes sense, because we are now moving along this triangle formation, and if we follow the pattern, if we do rebound from here, maybe the next stop would be along these lines, and then maybe a pullback down to 6,150 again, challenging this demand zone later in the future. Actually, we've had a pretty high degree of difficulty trying to break this resistance level, so it does make sense that if it challenges the 6,900 level, it would most likely pull back coupled with the potential weakness due to the ghost month. We'll see, right? On to the S&P 500, the index starting to show signs of weakness. It was steady all throughout the week until key economic data provided some additional volatility at the end of the week. GDP announcement on Thursday was welcome news for the markets, but it was sell-on news after the core PSEi numbers came out, closing the market below the 5,500 level. We did get a new high though, and if we zoom in to the 2-hour charts, we can see that this new high broke the previous high before. And the question here is this a UTAD or an upthrust after distribution? So far, we are hanging on to the 5,458 level. If this breaks down to 5,434, then we can expect any rallies here to be met with sell demand, and we could continue to go down to around 5,400 as the bears may take over from there. But so far, this hammer formation here defending the 5,458 zone time and again looks promising, and hopefully we could continue the rally this coming week. Key support area would be at around 5,360. We'll see if it does correct. This would be the area to watch out for. Meanwhile, after the US presidential debate last Friday morning here, Trump came out more confident of his wrong data compared to the timid Biden with his factual data. This increased the odds of a Trump 2.0 presidency to 67%. Apparently, there's a blockchain betting going on in a contract option out for the presidential election winner. One of Trump's key message was that he will increase tariffs, especially on imports from China, by around 60%. And basic economics, when you increase tariffs, this is usually inflationary. And when you talk about goods made in China, I mean, how many things are made in China, and you're going to put higher tariffs on that, right? So you're going to basically push the prices of a lot of things, and this could cause another round of inflation for the US. And of course, if inflation goes up, interest rates may have to stay higher for longer. And what does this mean for yields? And what does this mean for stocks? Which is why if you look at the reaction after the debate, the 10-year yields went up to around 4.4%, right? And if you look at how this affected equities, look at the Magnificent Seven, they are all down in last Friday's session. Or maybe they are just doing window dressing, locking in gains for the second quarter and the first half of the year, because maybe they think that, again, a pullback is imminent, maybe back to the 5,400 or the 5,360 level. To think about it, why is it Trump and Biden again? Don't they have other candidates? No? But anyway, that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risks accordingly. And I'll see you again next week. Bye-bye.